guys, what is going on? Welcome back to my Robinhood portfolio. Hope everybody had a fantastic day of trading today. As you can see here, the portfolio did very well again today in the green, up 625.54, representing 0.63% of the overall portfolio, with a rather ominous return in after-hours trading there, $6.66, representing 0.01% of the portfolio. And for the first time ever, we have now closed a trading day above $100,000 for the portfolio, so very excited about that. First of our goals has been met. $100,000 goal has been met. The next goal will be $200,000, and that'll be the goal at the end of next year. But the markets overall have been very strong, and again today, all three of the major indices were in the green. The S&P 500 was up 0.73%, the NASDAQ was up 1.1%, and the Dow 30 was up a little bit over 123 points, 0.57%. And as I scroll through my portfolio, you can see here a lot of green in the portfolio, a lot of 1+% return stocks as well. Of note there, Dow, DOW, up 2.9%. McDonald's, MCD up 1.05%, Archer, Daniels, Midland, ADM up 1.51%, SYY, Cisco 1.95%. So there's been a lot of stocks in the portfolio that have been doing very well. AMD 2.81%, Intel 1.12%, Microsoft 1.67%. So again, you can see here a very broad uptick in the stock market. Almost every one of my market sectors is in the green today. And I do anticipate a pullback at some point. As you guys know, the stock market has been on fire over the last few months. I do expect a 5 to 10% pullback at some point this year or early next year. It's always very difficult to predict when that's going to be happening. As you guys know, I've talked about this extensively in the past as well. Trading with regards to market timing is really not a very consistent or reproducible way of trading. So I'm not going to be pulling money out of the market, anticipating a pullback, then trying to put it in on the dip. Simply doesn't work. There's a lot of talk at the end of last year about a correction that was going to be happening. So if you would have pulled your money out of the market at the beginning of the year, you would have lost, I think the S&P 500 to date is up 19%, if I remember correctly. So you would have potentially lost a 19% return, which can basically equate to a negative 19% if you would have pulled your money out of the market. So would not advocate doing any market timing. I'm going to be leaving my money in the current stocks I have. I think I have a great selection of stocks so far. I have some riskier plays, as you guys know. PTLA, one of the riskier holdings in my portfolio right now, and I have a few different contrarian investments as well, including Ford here. But I'm going to be holding steady through any correction, and actually if there is a correction, I'm going to be taking a little bit more money and putting it into the portfolio. As you guys know, I put money into the portfolio on a regular basis. If stocks start getting cheaper, I'm going to be basically putting more money in, and I have about $12,000 right now in cash in the portfolio to take advantage of any market dips. So that's what I'm going to be doing over the next few months here. But today I'd like to talk a little bit about pattern day trading. This has come up quite a bit in the comments, in a lot of the comment threads. A lot of new viewers on the channel, new investors on Robinhood. A lot of you guys have been following along with my viewer penny stock series and have been asking about pattern day trading, how to avoid it, how to be protected against being labeled as a pattern day trader. So I just wanted to quickly talk a little bit about what it is and how to avoid it. So if we take a look at the home screen here, if you take a look at the upper left hand corner and click on that box, menu of options that opens up. If you take a look at the bottom and click on help, open, and you can see here a support center up on top. If we click the support center, now we have access to a number of different topics within Robinhood, including trading. So if we click on the trading menu here, we get another menu, and now we can see that there is actually a menu that talks about pattern day trading right in the middle here. And if we click on that, this gives a great overview of exactly what pattern day trading is. I'll just quickly point out that if you don't do anything on the portfolio, if you don't make any changes, you're automatically protected against pattern day trading. The trading app, Robinhood, will not let you do more than 3 trades in any 5-day trading period. Again, to prevent you from being labeled as a pattern day trader, which will essentially prevent you from doing any more day trades for a 90-day period. And this really isn't a Robinhood regulation necessarily. This is a regulation that all brokerage accounts have to follow. It's really meant to protect new investors against doing a lot of penny stock trading, a lot of day trading, and essentially losing money before they really know how the markets operate. Before getting a good education with the markets, a lot of people try to jump on the markets, do a lot of swing trading, day trading, and lose a lot of money. So that is why that particular restriction is in place. It's kind of funny to note that the regulators think that if you have greater than $25,000, you're somehow a market professional and you have no restrictions on any types of day trades. So if you have $25,000, even though you may be a new investor, you may not have any experience in the stock market, the regulators think you're fine to do unlimited day trading. So kind of a peculiar little caveat to that particular restriction. Again, if you have greater than $25,000, you really don't have to worry about pattern day trading. You are still labeled as a pattern day trader. It's simply that if you have less than $25,000 in your portfolio, that's when the restrictions happen. So it doesn't mean that if you have greater than $25,000, you can trade as many times as you want with no fear of being labeled as a pattern day trader. You will be labeled as a pattern day trader if you exceed 3 day trades in any 5-day trading period. But the caveat is that if you have greater than $25,000, you have no restrictions placed on you. But if you have less than $25,000, or if you had $25,000, you were labeled, then you fall below the $25,000 threshold, then you are also restricted as well for a 90-day period. And it's really, again, to protect new investors. But again, the caveat is if you have greater than $25,000, doesn't matter if you're a new investor or not, the regulators think you're fine to do day trading with. So that is what pattern day trading is all about. And the nice part about this overview here, and this is why I kind of walked you through getting to this particular menu, it goes really in depth about what pattern day trading is all about, why it matters, why it's in effect, and it also gives you great examples of a number of different scenarios in which you can count your day trades. A lot of new viewers on the channel as well have been asking, if I do this or that, do I get labeled as a pattern day trader? How many trades will this count as? And this goes into very, very good detail about exactly how a lot of these day trades are essentially counted, because not every trade is the same. And it also goes over, for example, what an execution is versus a trade. A lot of trades, especially stocks that don't have a lot of volume, if you put in, for example, a trade of 100 shares, but only 50 are sold off, then maybe a couple hours later, the other 50 are sold, is that 1 or 2 day trades. And that really kind of walks you through what the accounting is for different scenarios like this. And they can get really complicated, as you can imagine, with some of the different types of buy orders and sell orders. I just put out a couple videos talking about all of the different ways to buy and sell stocks on Robinhood. So it gets a little bit complex, but this is a great resource to take a look at to kind of go over what pattern day trading is all about. And then I want to show you one more thing as well, and this is the default method. Like I said, if you simply load Robinhood and start doing day trading and don't mess with any of the settings, it really protects you from becoming a pattern day trader, because it prevents you from doing more than 3 day trades in any 5-day trading period automatically. So if we click back out of this particular menu here and we get to the home screen again, click in the upper left hand corner again, and then we can click on the account button in the middle. If we click on that button, and if we scroll all the way to the bottom of this particular page, you can see here that there are mechanisms in place to prevent you from being labeled as a pattern day trader. You can see here day trades. I have one current day trade with MARA here, and you can see here it prevents you from doing that 4th day trade here. Essentially, it'll be checked out here. So you can see there, it's kind of going through. A day trade is a purchase sale of the same security on the same trading day. Because your portfolio value is over $25,000, you are exempt from day trade restrictions. So that's really what that's all about. If I had less than $25,000, there would be, I think there's like a lock sign on that particular circle there. So it's showing that it's open for me. But for you traders that have less than $25,000 in your account, all 3 of these particular circles would look open, as these 2 are here. But this one would have a little lock photo on top of that circle. So you could not do 4-day trades in a 5-day trading period. If you do that, you become labeled as a pattern day trader. If you click day trade settings, you can see here that you can actually toggle on or off the pattern day trading protection. And I definitely would not recommend that you do that. And the other caveat that I did not talk about is that you can actually contact Robinhood and ask them to put you on a cash-only account. The default trading account in Robinhood is a limited margins account, which basically means it's a margins account, and that's why the pattern day trading restrictions are in place. If you're on a cash account, there's no restrictions. But the only caveat behind that is if you sell off a stock, the cash proceedings from that stock are basically held in a holding period for a number of days. It could be 3 or 4 days before you could use that capital again. So an example of that would be you have a $1,000 portfolio, you buy and sell a stock, let's say it's $100 per share, you bought 10, you sold 10, so basically a $1,000 trade. You could not go back in and buy another stock for another 3 or 4 days. So yes, you get around the pattern day trading restrictions, but you can't use that capital again. If you are on a limited margins account, you could do another day trade. You could do 2 more day trades. You could do 3 day trades that week with that $1,000 because there's no longer that holding period. So that's the one caveat behind de-escalating to a cash account. You cannot reuse your money right away. So if you're using your entire portfolio to do a lot of these day trades, you can't use that. If you had $1,000 and you're only using maybe $100 or $200 per day trade, then that's fine. You could probably get more day trades in that way before all of your cash is locked up in the holding period. But for most people, I think, especially new investors starting off, I don't think you should be doing a high frequency, high dollar amount day trades. As you have seen from my portfolio, I've recently started doing penny stock trading, and I'm only doing like $50 day trades with penny stocks because, again, I'm not a seasoned or experienced penny stock investor. You know, I know quite a bit about the markets and how they operate, but even with all that knowledge, I'm not going to simply start doing $5,000, $10,000 day trades. That's the way that you lose all your money. You really have to go about trading in a very disciplined fashion. You really need to manage risk, you need to employ best practices, and you really need to do everything in a very structured and organized fashion. Simply trying to jump on some momentum trading with a particular penny stock, which I've seen a lot of penny stock investors do, is not the way to go. So I would not even recommend that new penny stock investors do more than 3 day trades per week. But again, that's kind of my recommendation. I'm a very conservative investor, as you guys probably know. But again, just wanted to talk a little bit about pattern day trading, you know, where to find those resources to really take a look at what it's all about, read about what different types of trades, how they will be accounted for, and then going through the mechanisms Robinhood have in place to prevent you from being labeled as a pattern day trader. So I think this will probably work 95% of the time. There are some day trades, like I said, that may be counted more than 1 day trade, and the application might not pick that up in time. For example, you know, selling off 100 shares in a stock that's thinly traded, maybe 50 execute in the morning, and then later in the day, the extra 50 execute. That may be counted as 1 day trade, or it may be counted as 2 day trades. So you may miss a few of those and become labeled as a pattern day trader, but I think for the majority of folks, especially most stocks that have good volume, this mechanism that Robinhood has in place will prevent you from being labeled as a pattern day trader. So just wanted to quickly talk about that. If you guys have anything to add to that discussion, if there's anything I said incorrectly or things I left out, please let me know in the comment threads down below. And if there's significant things I did leave out, I'll go ahead and do an update video about pattern day trading. And again, any constructive criticism on this video, other videos, please let me know on the channel as well. Always looking for your guys' input. And again, if you guys have any good topics to talk about, any other questions that you may have, please let me know. And if there's enough response, enough people asking the same types of questions, I'll put out a video about that question. So kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. I definitely appreciate all the support. We're coming up on 10,000 subscribers, which is absolutely phenomenal. I'm absolutely thrilled about that. So thank you so much for your support. And again, if you find any stocks that you have questions about, any cool trading methods that I haven't talked about in prior videos, please let me know. I want to do a little bit of reading about that, and I'll put out a video. So kind of with all of that, I'll end the video, and we'll see you guys next time.